Welcome to your daily 5 minutes market brief with JP Morgan and Luna. Today is August 5th, 2025. I am Luna.
I am JP Morgan. All the major U.S. stock indices, they staged some pretty impressive gains. We saw the Dow jump over 1.3%, S&P 500 up nearly 1.5%, and the Nasdaq surged almost 2%.
Wow, those are the biggest daily gains we've seen since late May, right?
Exactly. And it wasn't just one or two stocks. It was pretty broad-based.
Yeah.
Though, high growth names, tech stocks like Tesla, Spotify, they definitely helped lead the charge. Spotify was up, 5%?
So what really lit the fire here? What kicked off this sudden optimism?
Well, a couple of things. Investors definitely jumped back in, maybe some dip buying after things sold off a bit last week. But the main engine, it seems, is this growing hope that the Fed will actually cut interest rates in September.
And that's tied to the jobs report from last Friday, the weaker one.
Precisely. That report cooled expectations about the economy running too hot. Plus, you had some decent earnings news, particularly in tech. Spotify, as we mentioned, and Palantir raised its forecast. That sort of thing helps the overall risk mood.
Okay, but it wasn't just stocks moving, was it? We saw action in other places too.
No, definitely not. It shows how connected everything is, really. Take gold, for instance. Safe haven gold prices actually ticked up a bit.
Interesting. So higher stocks and higher gold.
Yeah, extending a winning streak, actually. It's
Yeah.
trading around $3,375 an ounce. That seems to be helped by a slightly softer U.S. dollar and lower bond yields. Still seen as a safe place, amidst the uncertainty.
Right, and those bond yields, they've really taken a dive, haven't they? That seems like the big story feeding the rate cut narrative.
Absolutely. Treasury yields plunged. The benchmark 10-year yield is now hovering around 4.2%, and the 2-year yield, which is often seen as more sensitive to immediate Fed policy expectations, that fell to around 3.66%. That's a 3-month low.
Wow. So traders are really betting on that September cut.
They are. Futures markets are now implying something like an 84% to 94% probability. It's quite high.
Yeah.
And Bitcoin, interestingly, held fairly steady near $114,700. Reflects maybe better risk sentiment, ongoing institutional interest, perhaps.
Okay. Beyond the pure market mechanics, there are these bigger macro things playing out. Those U.S.-India tariff tensions, for example.
Yes, that adds a layer of global trade uncertainty. President Trump has renewed threats to raise tariffs substantially on Indian goods, reportedly up to 100%.
And the reason cited is India buying Russian oil.
That's the criticism, yes. India's government, unsurprisingly, has reacted strongly. They called the threat unjustified and unreasonable and said they'll protect their interests. So something to watch there.
And meanwhile, we're hearing more dovish signals coming from the Fed itself.
We are. That bond rally we talked about, it got a boost not just from the weak jobs report, but also from Fed officials. San Francisco Fed President Mary Daly, for instance, she specifically said the time is nearing for rate cuts.
Okay. And her reasoning.
Pointing to the cooling job market. And crucially, she mentioned no sign of persistent tariff-driven inflation. That's key for them.
So looking ahead, what should you, our listeners, be watching for? What are the next potential market movers?
Well, definitely more economic data for clues. This Thursday, August 7th, we get the weekly initial jobless claims numbers. And then the really big one is the July Consumer Price Index, the CPI report. That's due August 12th.
And the market really needs to see inflation continuing to moderate in that CPI print to justify those rate cut bets.
Exactly. That gives the Fed the justification, the cover, as they say, to actually cut rates. Also, keep an eye on earnings. The season's winding down, but big names like Disney and Caterpillar report this week.
Right, and earnings have actually been surprisingly strong so far, haven't they? Better than feared.
They have. Quite resilient, actually. Aggregate S&P 500 profit growth looks like it's coming in around 11% year on year, much better than forecasts. That certainly helped offset some of the economic slowdown worries.
And we should also mention other central banks. It's not just the Fed.
Good point. This Thursday, the Bank of England is widely expected to cut its main interest rate, probably from 4.25% down to 4.000%. It reinforces that global trend towards, easier money.
Okay, so pulling it all together, what's the near-term outlook? What are the big risks you see?
Look, the momentum right now, it's clearly positive, driven by this rate cut optimism. It could continue in the short term. But, and this is important, it's built on a pretty delicate foundation. That September Fed decision is not locked in. It's still data dependent.
Meaning strong data could upset the apple cart.
Absolutely. Unexpectedly strong inflation or jobs data could force markets to quickly rethink those rate cut odds, and that could spark volatility.
And there are those other background risks, too. Geopolitics, policy stuff.
Yes, definitely. Those tariff issues we mentioned, broader concerns maybe about stability,
Yeah.
they create a more cautious undertone for longer-term investors.
Yeah.
Remember the VIX, the fear index? It briefly popped above 20 late last week.
A little reminder that things can change fast.
Exactly. It's a reminder that the current calm might be a bit deceptive. You need to stay aware.
So, final thought for you listening today. If you're involved with US dollar assets, the word seems to be nimble. While there might be more upside in stocks, maybe think about balance. Consider hedges. Because the very things driving this rally Fed shifts, geopolitics could just as easily become sources of turbulence. Makes you think, how quickly could this all turn? Something to keep in mind. Enjoy the brief? Please like and subscribe. From equities and bonds to global risk sentiment, we deliver day's key market moves, macro trends, and institutional flows in just 5 minutes. Live stream coming soon. Stay tuned.